SPY was down nearly 1.5% today, and we are down nearly 5% in the last week. This has been a quick sell-off over the last 5 or 6 trading sessions, catching a lot of traders off guard. These unexpected sell-offs are why we preach having hedged portfolios in place. We actually had the 600, 585 put debit spread on the SPY. This put debit spread was in the March 21st expiration. We actually took half of that off today near the close to lock in some profits. We do have a number of long positions that we've been initiating this week as we felt like this would be a really great support zone. So we've kind of come down even a little lower than our original assessment of a support zone. However, we still think this is a great place to initiate long positions, especially if you have a hedge in place. Our lower dealer cluster zone has shifted slightly lower over the course of the last couple of days, and this makes sense as the options market has shifted lower intraday during the trading session. I do think this last dip at the very end of the day was a little overdone. If you look at the volume in the options market, most of the volume was concentrated between 590 and 600. So with the SPY trading at 585, we are well below the bulk of the concentration in options market volume. Taking a look at our gamma exposure data graph, there are 2 key indicators that we use. One is our GEX intensity gauge. This is basically measuring gamma exposure on a relative basis. We are at the very extreme far end. Once we get to -3 or -4 billion, this is typically a place where we see large reversals out of negative gamma exposure territory and at least back to the 0 gamma range. 0 gamma is currently sitting at 605 on the spot. The other gauge that we watch is our GEX weighted volatility gauge. This measures implied volatility on a 52-week basis. And basically what this is saying is that we are at the upper end of the implied volatility range as we look back over the last 52 weeks. So at 2 very extreme ends on both of these gauges, and we've been discussing this over the last 2 videos, the importance of these extreme readings on both of these gauges. And so we think a bounce is coming, even if it is just temporary. And so that's why we started locking in profits on our hedge positions.
Thanks, Anthony. The last 2 days have definitely been uncertain, and we've seen some points and counterpoints in both directions. We now see the Dow has made a lower low and probably is headed toward this lower Keltner channel, but just means that this pullback likely isn't over as we see. The upper Keltner channel is still holding strong way up here. I did notice that a lot of the volume was still at higher strikes today. We still have this big GEX cluster at 445. We're not necessarily trying to pinpoint the exact bottom, but in general, I think these oversold conditions can lend to a bounce. The one last thing I'll mention, which is very brief, yesterday's video, we mentioned that the VIX was holding that whole moving average, and the Keltners combined with that gave room for volatility to expand further. And also in the newsletter, we mentioned that with 22 as a potential target. And so far today, we reached 21. It does look like tomorrow there's a pretty good chance that we could reach 22. You pointed out the big negative GEX on SPY, and we're seeing some other signals that we may be getting close to a bounce.
Yeah, Sean. And another point I would make is this has really been an across the board route. Even assets like gold, GLD, down also 1.5% today, nearly trading all the way back down to the 265 area, which is where we were back at the beginning of February. So basically coming full circle on a number of names, commodities, crypto, stocks, a wide variety of asset classes have been selling off over the past week. In general, these moves are healthy for the market, and that's another factor going into our basic assessment of a potential buy the dip scenario unfolding here. When we look at GLD, the largest gamma exposure concentration is at the 270 strike. We saw big volume in the options market come in at the 270 strike today as well, over 30,000 contracts. So in terms of GLD, the potential for a bounce back up into this 270 strike is quite high in our opinion. This may take a couple weeks to play out, but this is a position that we have on in our portfolio, an option strategy targeting this 270 to 280 range. So a bounce back up in here is our expectation in the next 3 to 4 weeks. And we have an option strategy on reflecting that bias. By the way, if you want to follow along with all the moves we're making in our portfolio, you can see our strategy, how we hedge, how we take advantage of these kind of moves in the market. Check out our community Discord, link in the description below.
Thanks, Anthony. Let's take a look at Alcoa AA. I actually brought this one up in Discord a couple of days ago, and it hasn't done much, which is no surprise given what we've seen in the market. But there's a lot of talk from this administration regarding aluminum. And of course, Alcoa is a huge player in the aluminum market. So it's definitely one to watch in terms of, those political moves having an impact on the stock. We're a little bit below the lower dealer cluster zone, but what caught my attention was this really big GEX cluster at 40. So what I like about the chart is that the price declined precipitously since December, but it's coming into this area that around 33 or so, you can see that's been an important level. Maybe this implies that Alcoa will fill this gap that goes back to September. That would make sense from a technical standpoint. And it's also an area that probably has important support. So with Alcoa, I'm watching this 33 area. It's probably an area that marks important support, given that it would be the filling of this gap back to September. And it also represents an important supply demand level. If you look back at areas where the stock broke out or found support. So we'll keep an eye on Alcoa at this area for a potential bounce.
Thanks, Sean. Next, let's take a look at Nvidia. Nvidia trading down substantially today, nearly 8% lower on the day. Nvidia's earnings came out last night. Not a whole lot of activity after hours, but today we saw the big move down. And this is actually catching our interest now that we are approaching the 120 level. This is a position that we actually entered at the end of January and caught most of the move in the early part of February here. Now that we've seen this pretty substantial pullback, we are looking at a potentially speculative play if we can get a little lower. In particular, the 110 to 120 zone looks very interesting. This is our lower dealer cluster zone, and I think this does have the potential to move a little bit lower. I'd like to see at least 115 tagged. That would also correspond to the support that we saw back here at the end of January. That'd be a really interesting place to take a speculative position for a potential bounce off of that support. You can see in the options market, the volume is pretty widespread. Everything from 115 all the way up to 150 was traded very heavily today. You can see this is 200,000. So even at the 150 strike, 200,000 contracts were traded today alone. So this is skewed to the upside in terms of options volume. And I think speculators are going to come in and start taking advantage of these lower prices, since we've seen a nearly 15+% decline in just the last week or so. And I also want to take a look at Walmart. Walmart was one of the lone stocks that was trading higher today, actually up over 0.5%. We highlighted this 100 level here about a week ago as the largest scam exposure concentration. We're continuing to see large volume coming in at the 100 strike, nearly 20,000 contracts traded today. Walmart hit a recent low back here on Monday near the open on the 24th and has since been rallying higher. This is one of these names that typically does well in big sell-off environments or recessionary environments. And so incorporating an option strategy, perhaps targeting the 100 or 105 strike over the next several weeks, could be an interesting addition to an options portfolio, especially for diversification purposes. So this is a name that we're actually going to be looking at adding into our portfolio here in the coming few trading sessions. And if you're interested in accessing our gamma exposure dashboard and our option flow analytics tools, head on over to geeksoffinance.com. You can sign up and become a member. We are running a promotional offer, $300 off our yearly portfolio manager tier subscription. Use code WINTER2025 at checkout. We have a few spots remaining and we are ending this promotion in the next couple of days. So take advantage of that while you can. Members also get access to our premium channels in Discord. You can follow along with all the moves that we're making in our options portfolio. And we've got a ton of great traders in there sharing their own trade setups as well. So you don't want to miss that. Link in the description below. We're also going to be rolling out our algorithmic trading strategies with full backtest results here in the next few days. So be on the lookout for that new feature as well. Thanks so much, everybody, for watching. We'll see you guys in the next video.